So we're looking for, again, a topping area up here on 2066 on the ES and up to 272. Maybe they'll even push it a little higher. I just added some puts in our new option trading position, directional trading position, using SPY options. In this case today, put options. The price at 335. So we're looking for a larger scale market drop, potentially running the ES. We use the ES to track these. Potentially running the ES down to 2068 down to 2020, losing about 40, 50 handles sometime over the next week or so. Maybe sooner. We'll have to see what happens. They're really pushing this market here, trying to just turn it into a big bullish fiasco, which is great. They got the Dow up here early, up 130 points. Yeehaw, yeehaw. Riggers, yeehaw. 1.26 on the trend, early trend, and advanced decline line up 1500 handles. That's very bullish. So we're just going to see if they can try to jam them back up over 70, 72. But we put these put options on, and we're just going to hang with those now for a couple weeks and see if we get a nice move to the bottom. They're a little lower priced now at 3.23. If you want to try to enter anytime in this area, get a good price, better than my price. And like I said, let's see if 207275 can hold them back. Okay, so they're taking off now. Big spike move here on the upside on the Nasdaq. And we're going to start out with a paper trade here as soon as I can get the right configuration. With all this spiky move here, I don't know that they're going to stall out right up here, but they might. So I'm looking for a little bit in hindsight, but 27.5 as a paper trade short, just to start them off here. And it's not a trade, it's just watching to see if 27.5, where I got my short signal, will give us a pullback, well, initially to 25 and then perhaps a little bit lower. There's it's just a 2-point type trade. There it is there. So let's see if 25 now. So that was a successful, in hindsight though, it's just a paper trade measure. Let's see if this orange line tends to hold the market back right now. And we start to see the prices slide and soften up from this level. If you recall, and I got some new updated information here. Where's my notes? I don't know. This missed me completely. Went right over my head. But Obama and Yellen had that meeting. Remember that? It was real quiet. Oh, Obama meets with Yellen. La 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 la. And it was real like blasé. There's no details, but they had actually had several meetings. But they only acted like they had one meeting and just friendly talk and niceties and everything. Well, the fact is it's an election year, and the markets are usually lean on the bullish side around that time. But I'm almost assured, because they do this area, that he appealed to Yellen to keep that market up at all costs. Well, lo and behold, we've had I was calling the top, and we were holding these options, these put options. We had 3 times where the market ran up in the morning and then fizzled out. Do you remember that? Just fizzled out back to zero, then went below zero. Then we had the one the other day, same thing, big up move in the morning, and then the thing just completely fizzled out back into the low, and then they'd hike them up, and then they'd jack them up, and then yesterday was the big jack up, just trying to bury that. But think about it, right after that meeting, all of a sudden we had that type of stock market action where even though the market's trying to sell off really bad and fizzle out, they're coming in big time and very obvious. Of course, I narrated that the whole time to support the market. Now, why is he calling in to appeal it? Normally, last year of a president's thing tends to be bullish anyway, and you can go back and check those years in history and see it. Oh, but that's because right now the stock market historically is most overvalued it's ever been relative to the total GDP. That's the gross domestic product. And I was doing some research last night and studying some other works of some brilliant researchers. Oh my God, the thing is insanely overpriced compared to gross domestic product right now. And by all the other measures I use to run these short term moves and everything, that's why the sell offs, the fizzle out moves, which are very bearish, that's why I was a little frustrated yesterday because every time you get a market that ramps up or moves really higher earlier and then fizzles, it's up 150 points like it was on those two occasions, and then closes into the close or mid-session, comes all the way back to zero and goes negative, that is a very bearish move on the markets. So that happened on 3 occasions. So clearly there's a really strong rigging presence in here trying to shore these things up, the market up, because, and apparently that's why Obama called him in, because the market is really bearish right now and he's appealing to her, don't let this thing get crashed out while I'm have my last year here, because we only got uh, May, June, July, August, September, October, 7-8 months left of the tenure of this current so-called president, and that's pretty important. That's pretty vital there. So basically, if for any reason we get a pullback in the next week, I've got some measures on this current option. If we get a pullback in about the next week down to the 203 area on the SPY, that's going to turn this $3.35, 30 cents average option into about 539. So a double would be about 620. Well, that occurs on a move to 202 in the next week. If it takes a little longer, then those optionals will have a little more punch. So a goal of around 202, somewhere in there, is going to right here, currently 205.92. Target's going to be around 202, which is about a 40 handle drop from here. That's going to produce approximate double on this option. So that's what we're kind of watching for. Not a big crash, and I'm still expecting it to be supportive. But right now, the public's just asking to get a big surprise here with this market setting up the way it is. So we're just kind of watching now to see if get some topping action. Notice how they haven't broken out of 27 yet. They've tried to jump up there, but they haven't yet. So with that in mind, let's we got another high up here, and that's would be equivalent to about a 207.2 on the ES. This orange line is like a current high, and it was a breakout attempt where I gave the short idea, but they're not really leaving it behind, but they're kind of hovering there. I'll just leave it orange for now. So on the opening range, where's my opening range lines? Are down here somewhere. Here they are. Let's get the opening range mark to start them off here. Okay, low is here. Well, just barely. Well, yeah, that low's good. And the high, since opening here, is actually didn't make it to that orange line. Didn't quite make it to that orange line in the first 5 minutes. The high was is that it? No, actually only got to here. This is the high right here. So a very tight opening range of 24.75 to 17. So approximately 7 handles. So 3.5 from 25 be right around 2150, is it? I just kind of eyeball. Yeah, around 2150. All right, and they're trying to hike them up here a little bit, breaking out above this 27 level for another desperate attempt to ramp up here. And let's see if we can, still watching the first 15 minutes here because they may really try to pull something. Again, I'm getting, see, we got level choppy, level 1 here. Okay, we're gonna hit the short side and just work a really tight stop if we need to. Well, we have to, because they may try to blast them a little higher here. Stay ready here. High coming in at 35. Let's see if we can pop it out. And okay, let's go short right here at the market. Going short at the market right here, 34.50. 34.50 short, 34.50, and looking for just a small pullback to around 30, just under 32. This is just a minor clip for a short trade here. If they blast them higher here, we're going to have to get right out. But watching 34.50 for a slip down to 32.50 or lower. Just a quick clip for 2 points. So short at 34.50 and watch for a quick drop to 32.50 or lower here. So all we want is 2 points out of the deal here. Let's see if we get it. Let's see if we can get 2 points out of the deal here. See if we can drop them down to 32.50. And it might be a larger scale move, but that's not what I'm searching for in this trade. This is a trade where we try to use a 250 stop or a 250 type gain. Two-point gain, maybe a 250 stop. Let's see if we can knock them down to 250 here and just grab 2 points. Let's see if we can do that, or got to watch like 36, 50, 37 to exit if they start hyping them up there. Let's see if they can drop them down to 32.50. It's got to be a fast trade. We need a fast move here. Let's see if we can dip them right down real quick here under 30, 32, 50. 32.50 is a 2-point gain. And clip them right there, exit right there at the market, right there, 250, 250, 2/4, right there, boom, 2 points. That's all we wanted. 34.50, 32.50, plus 2 points. That's all we wanted. They may start selling off from here. That may have been the top for the rest of eternity. I don't think so. I actually think they're going higher this year. They're going to move higher. But for right now, the market desperately, and I mean desperately, needs a pullback to refresh itself. But that was totally 100% designed as a 2-point trade there. All right, so now I'm just curious what that last high was. 69.50. All right, I'm just kind of monitoring this carefully here. Look at the emerging markets picking up again. Our JJG picking up. Apple holding tight. And up again on the our biotechnology shares. It's weird, the labels aren't coming out here today. Everything's different. Markets are so weird, and the computer stuff, I'll tell you, one day something works one way, the next day it doesn't work the same. Who knows? All right, well, we've got the volume was stronger off the opening day, and that's normal because the because of the big boost yesterday. That goes out in the world, and all the regular people who don't watch the markets carefully, they get all hyper on the opening. So it was a little bit better than normal, not that much really. The high was 1,500 contracts. Normal NQ is whatever normal is 1,000 to 1,500. Usually on a more hyper day, 17 to 2,000 contracts, and then it'll back off a little bit. But today it's a little bit stronger, but not all that much. All right, so they're taking off here, back up to 070 here. That's good. Good for them. Keep the hype going. More for us on the downside. So we're going to just hold this position in the puts, and you can get a better price here at 318. I was inclined to wait, but I had my targets and I followed that. So we own them around an average price. On the first batch was 335, and then on a dip I said you can buy more. They were 323. So somewhere average around whatever that is, around 327. We'll kind of use that as our official price, and we'll just be holding those for a while. Ideally, I mean, the sooner the better, that if they can see the market fade out here. But it's strong, and they're just trying to pump it up again here. Let's see if they can start to fizzle out. And if we get one of those fizzle outs off of this up Dow 30 thing later in the day here, that'll be a very good sign. Another good sign of weakness. So we had that 2-point clip here, and I'm getting another one right here. So we're going to go short right here at the market, 41.50, going short at the market, 41.50, 41.75, and we're looking for a move down to 41.50, and we're looking for a move down to 39.50. They're kind of jumping here a little, looking for 41.50, jumping down to 39.50. Let me get this up here. Just looking for a minor blip down to 39.50. Let's see if we get them going here. A little pullback here. Let's get them dipped down just a little lower here. 40, 40, 40, 39.75. Go ahead and exit right there at 39.50. So we did it again. It's a good little method. It's just like a little hyper scalp method. So 41.50 short, 39.50 plus 2 points. You can see though, if I sat here and did those all day, we'd get to our 8 to 10 point goal pretty fast on our daily target goals. If I just did that and they were all successful, but we just take them when they show up usually. So we're up 4 points so far in the day. Again, winning the game is we consider to be 8 to 15 Nasdaq points. Will give us a nice paycheck for the day, and that's all we want. We don't want to, swing for the fences and just try to cut risk. After being in this business a long time, you find that cutting risk is so darn important, and so that's what we try to do. Okay, so they're knocking them back a little bit here after running up towards the 70 level. Good sign so far. Again, I believe that it will end up, they may hang the market up here for a while, after the two big upside blasts. Again, we're looking for eventual move back to 2049 will be the real key to get this overall back to 2050. That's a big drop for now, and that may not happen today. Could, but everybody's just kind of frothing about the market being up in oil and all that stuff, but it's not a big deal for right now. Got that SPY up over 207 here, so we're trying to see if the market can top out a little bit here and start to slowly unwind. Crude oil's backed off a little bit. The golds are backed off a little with the dollar up. So overall expecting that we could see market get hit with selling anytime. It could be a rough go here. Look at that nice jump on JJG. This is our second to latest recommendation. This is across the board grain market ETF here. Not sure. There it is. iPath Bloomberg Grain Subindex, the JJD. This is corn, wheat, soybeans. The grain complex in an ETF, looking for these poor farmers that are just barely making it, can't even plant their crops. It's driven those prices down so low that over the next year we're looking for a move back up to 40 area, 39 to 40, and then we'll sell it for a nice gain. We're long at 30.10. And our most recent recommendation, the iShares Nasdaq Biotech Index. It's been the talk of Wall Street the last few days, and we've been in this now for close to a week and a half, up already over 12%. And now the big talk is, wow, the biotech index is fired up. We're going to hold this again. These are like, whenever I recommend one of these, are normally like a 1 year type hold minimum. So I just to let you know, they're not any kind of scalps or anything. For the directional trades, we use that on the options, the put and call options. But Apple, we've been long since just under 95. That was some time ago. Early January, mid-January, I forget. I've got the details somewhere, but I'm not keeping a real strong track record. It's like if you're here in the room, you're going to get these trades. You're going to be able to research them, put them on when I do. I'm giving you exact entry times, so they're very good entries. But, usually have a day or so to check into it a little if you want to get into these. But they're all very good good trades. The emerging markets were doing just fantastic. This EET, we were trading this when they were just getting roasted down under 35 area, I believe it was. I can show you the chart. Down in this, when they're really getting roasted, yeah, where this 35 to 36 area is when I was recommending buying them. This was during that early roasting period, during the early mid-January, or early January to mid-January, when the market was getting hit. I was saying buy the emerging markets, and we were buying into a hole on the EWZ as well. And you can see that 36 currently, just a tremendous boost. Just rough estimate, 36 to currently 51. You can see 46. Just a 40% type move on that. And so we get a lot of good. We're on the right side of all these things here, and we're just kind of keeping an eye. We've been long the gold since 1080. And the crude oil under that, right around that 30 area, that little dip under there. I said buy more. I think we already had a position on around 32, and now 30, right around 30, a little bit dip under that added to it. So we're just holding these things. They're long-term holds. They're not scalps. Let's see which way the wind blows on these things. Now watching for the ES to fade. And gradually, it's going to take a while because everybody's all exuberant about the market's up again. they will pour water on everybody's big fantasy here. I think pretty soon we got the now these puts are getting a little more valuable because just a slight that slight ramp up and a slight drop is making the our puts, which we own an average price of around 327, currently trading 326 after they dipped down around 319. So they're starting to get valuable now as traders start speculating, gee, this market may get hit with selling. As that mentality comes in and prices pull back, these things should jump nicely. And again, we're looking for a bigger scale move, the SPY down to currently trading 207.34 for move back down to 203 or lower ultimately. 40 handle drop on the SP. This is 10% approximately, 10 times the market, so 40 handle drop would be 4 points here. And that's the way they work. So now we're just sitting and watching. We've had two scalps so far, our little 2 point scalp trades, which are very specific setups we've had. And that's what we're doing right now. We're just kind of watching for that and watching for another trade to come up pretty soon, ideally.